The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got initial jobless claims. We got a little bit of GDP data this morning, all ahead of the important PCE number tomorrow. But markets, we catch a little bit of a lift up to basically where we were before you sold off yesterday at about 2 o'clock Eastern Time on the Fed minutes. The price point in the S&P is about 4,020. We're up by 21 points right now. That's about 0.5%. NASDAQ 100 up by about 1.1% right now, actually above where you were at about 2 p.m. Eastern Time in the NASDAQ 100. This, as we have yields up a bit, we got the 10-year at about 3.96%, the yield in the 10-year. The 30-year, as you see, not quite up to that level just yet. So what do you have? You have the S&Ps right back to where we were before the Fed minutes. You have the NASDAQ 100 above that price level. You have the Dow still about 120 points below that price level right now, with the Dow just up 0.2%, and the Russell up by about 0.25%. Crude up about $1 to 75.01. We were as low as 73.80 yesterday. Gold contract trading lower this morning. There's some volatility for you on the jobs number this morning. Gold kind of right back to where you were at 8.30. You trade down to 18.24. You're at 18.32 right now, and we jump to notes and bonds. And what do we got, folks? Lower price, higher yield coming at you. We've jumped a bit from the spike low of 110.25, but as I said, right now we're at about 3.96%. The 10-year negative by 8 ticks. The 30-year negative by 14 ticks right now. And we jump over to the volatility index on a positive market day. The VIX pulling back a bit. We got a 21 handle, 21.77 right now in that volatility index. Let's jump around to some of the currencies. Dollar index right now. There's some volatility for you. On that 8:30 number, you spike from about 104.50 to 104.65. We're at 104.60 right now. We'll call it basically flat on the session for the dollar index. We jump to the euro-US dollar, as they have some volatility going on as well. Euro 160 right now, and we'll jump to the dollar yen. Dollar yen right now spiking to 135.36 right now. All right, getting into the data. Jobless claims. Pretty remarkable in light of everything else going on. In light of where we are for the Fed funds rate, in light of where we are for the 10-year. I mean, folks, you're talking about a guaranteed rate of return from the U.S. government of 4% over 10 years. We're getting at levels, man. That is a competition for the market for funds, period. End of sentence. You go to the 2-year, right? What are we talking about? I mean, let's pull it up right now, actually. Can I pull it up that quick? Here we go. What are we talking about on the yields? 2-year at about 4.7. The 1-year, 5.05. And those are treasuries. I'll pull up the CD rates later in the show to take a look. There's some lofty numbers, man, especially when you go out 2 years, 5 years, whatever it is. Risk-free return, rate of return. Some serious numbers, man, for a risk-free rate of return when you got a market right now that potentially has got a pullback to the tune of 20 to 25%. According to some analysts on Wall Street. All right, so the jobless claims comes in, 192,000 for the week ended February 18th. Market was looking for about 200,000, now 8,000 in this number. I'm always surprised. I was watching Bloomberg just when this market hit at 8:30, and Mike McKee, who I think does a great job for them with some of the data there, almost acted like it was very surprising, and it is very surprising if you have no idea the expectations for 200. But the expectations already for 200 comes in at 192. They're chopping around at about 200,000, which all things considered, folks, historically, a pretty dramatic low. Continuing claims decreasing. It's the biggest drop since December by 37,000 to 1.65 million. Those continuing claims, always 1 week delayed, so that's for the week ended February 11th versus the initial jobless claims, which are as of February 18th. So this just marches on. Now, what we also got here is we got the fourth quarter GDP revised lower. Revision of 2.7%. I believe that's the final reading, is it? Or is it just Nonetheless, it came in at 2.9. It's now at 2.7. Yeah. Okay. Let's jump around to some of the FANG stocks and see how we're trading. Pretty interesting that this market just marches forward, man. We're up at a full 4,022. Interesting that we're sitting right at these levels. I mean, you're coming into the opening bell right where we sold off yesterday, folks. You want your back against the wall right now. Very tough to imagine this market just forgetting about what happened on Thursday and Friday, man. You know, where have we pulled back to from where we were on January 6th in terms of where this acceleration began, up to about 4,200. You give back about 50%. So maybe we catch a little bit of a bounce here from about that 4,000 price point in the S&Ps. We're trading right now at 4,022. Jump to some of the other stocks. We'll talk about NVIDIA later in the program. NVIDIA, strong numbers, man. They are trading higher. Check that out. Ooh, that's a double bagger. In terms of you accelerate higher last night, it's catching a bit again this morning. You're up about $30 bucks, man, on this equity, and you jump over. This thing only had about an $11 move priced in either direction. So you're going to get almost a $30 pop to the upside right now for NVIDIA, being helped, of course, by a market that's accelerating higher, up about 24. And on the flip side of that, Domino's Pizza, disappointing, man. You're down $30 basically on Domino's now. I was taking a look at Domino's earlier. Put this thing, pretty remarkable, right? Where did we bounce to? You got to have Fibonacci's, man, all right? From where we were at the beginning of 2022, you drive down to 325. Where does this thing pop to? You make a double top right at the 382. We sell off, and what's going to happen? We're going to open basically pushing those lows, man. Now, it got down to 299 in October. We're going to open today at about, 315. You put this thing back on a 5-year weekly. There we go. For Domino's, and what you're seeing here is this 300 price point, right? Maybe that's a nice area. I mean, at least you have a price point. Let's back it up even a little bit further. But as you can see, that's kind of where this thing accelerated to originally in August of 2018. So what are you going to do? You're going to do potentially about a 5-year base of that price level. Maybe that's where it catches a bid. You trade below 300, man. 200 is the next price point, right? You're talking about trading down to basically October of 2017 when you did 30.6 million shares on the monthly. Is that the most ever? Pretty remarkable, right? Maybe that's where it's going back to, man. Pretty remarkable. 30.6 million shares on a monthly basis dwarfs almost anything else October of 2017. Now, that was on the original taper tantrum, I believe, in the market, right? Is that right? 2017? No, that was 18. Yeah, so the market was doing just fine. So Domino's had a scare. They had some huge volume back then. Yeah, there it is. Maybe that's where it's heading to, 200 bucks. Today you're going to open at about 315 for Domino shares. Let's jump around to some of the other FANG stocks. Amazon shares up a little bit with the market this morning, 96.50. This thing's down from 101 last week. We jump over to Apple shares right now. Apple catching a bid with everything else. Yeah, up more than $1 right now for Apple. We jump over to Tesla shares. Tesla shares catching a bid. You're up by almost $4 for Tesla. Microsoft shares up by about $4. There you go, for Microsoft shares. All right, folks, stay tuned. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. We'll get his take on some of the market action today. Come on back, folks. We'll go over some of the equities that are moving this morning with earnings. We got 16 minutes to go until the opening bell. S&Ps catching a bid. The bear market rally. S&Ps up by 0.2% now, 25 points. Again, though, critical area, right back to where we were at 2 p.m. Eastern time before those Fed minutes. Stay tuned, folks. Come back, talk to our man Kevin Hincks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Markets continuing to drift higher right now, with the S&Ps approaching 27 points in the positive right now. NASDAQ 100, you're up 155 points, 1.3% in the green, and you have the Dow now up 100 points. That's about 0.3% in the positive. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time right here on Tiger TV, the TD Ameritrade Network with Fast Market. Your host, Kevin Hincks, Tom White, the whole team at TD Ameritrade Network. They get some great guests, folks. They walk you through hypothetical trade setups. They're talking about options. They're talking about defined risk. Kevin Hincks, weekly jobless claims, 192,000. The economy marches on. Good morning, man.
Macro versus micro, and that's what you're seeing play out in real time here. In terms of micro, you got NVIDIA's earnings and hope. You know, good news from NVIDIA and excitement about the future of AI. Still a lot of variables going on with AI, but a lot of excitement there in NVIDIA. Then you've got the macro, which is the GDP number coming in. Not the headline, wasn't a very scary number, Tommy, but if you look inside the tables, some very concerning bits of information coming out of the GDP data in terms of wages and salaries, in terms of overall updates to GDP, Tommy. That's why you saw bonds spike lower and yields spike higher.
Yeah, pretty remarkable. We're almost back to 4%, Kevin. I think last I saw, what we had, 3.96, something like that, pretty quickly. The 10-year trading from 116 down to 111. And I guess we march forward, Kevin. I mean, it's pretty interesting, this market. We're catching quite a bit here. I know yesterday we kind of had the conversation saying, you know, well, we're up by 5 or 6 points, I think, when I was talking to you. Quite a sell-off on the Fed minutes. We're actually above that price level just now on that last acceleration on the S&Ps. But pretty interesting. We're now just coming into, Kevin, on the S&Ps, kind of right where we were at 2 o'clock yesterday. What did you think of some of the Fed minutes and the market reaction there?
Well, I thought the Fed minutes were pretty much mostly exactly what we thought, but I did notice some discussion in terms of a 50 basis point hike at the last Fed meeting. Even though it was unanimous for a quarter point, they don't name names in the Fed minutes, but clearly Bullard and Mester were two of the people that wanted or favored a 50 basis point hike. And now that that's in the rhetoric and with data coming in stronger, I'm watching for how much momentum a 50 basis point rate hike does. James Bullard was quite convincing in his discussion yesterday. So I'm watching for Fed speakers coming out today. We get Raphael Bostic and Mary Daly are speaking today. I expect that drumbeat to continue, Tommy. Higher rates for longer.
And what do you think about big picture, Kevin? And there's no magic answer on this, but I find myself thinking about it more and more as I see these rates again getting back to 4%. You got the 2-year rising, of course. I mean, 5%, pretty much something that you might be able to get right now on a 1-year basis, 2-year basis. What do you think of the competition that equity markets are going to be facing right now? It seems like for a considerable period of time, at least a year or two, if not even, the dynamic changing of 0% free money kind of gone forever, hopefully, because if we get back there, man, that means they're going to need to be stimulating for some reason. But what do you think about that weight? Because I digest, okay, we had the market at 4,800, where we're at 4,000 right now. But boy, there is a lot of competition, man, when you're talking about a guaranteed risk-free rate of return of 4 to 5% right now, when the market has a lot of volatility potentially ahead. What do you think of that in a potential weight on equities going forward?
Well, first and foremost, 4% 10-year yield shouldn't scare anybody, right? Historically, that's still a relatively low number. Now, the velocity of the move up to 4% may cause some short-term uncertainty in the markets, but 4% yields, remember, I'll make the opposite case, Tommy, that 0% interest rates are a tax and a punishment of savers and the elderly that should be more into bonds. So this is really the bond market coming back into balance. I don't think there's any worry about a 4%. Can stocks go up with a 4% 10-year yield? Of course they can. Now, the velocity of the increase is a little harsh. I think that's causing some hesitation here, but no one should be afraid of a 4% 10-year.
I like it, man. I like it. And maybe that's where my head is going, because even thinking from that, if you're in, folks, that retirement or even near it, it seems like, and you make the great point, that it was a tax, because back then, in terms of 0%, I don't know how you retire and think you're going to be in fixed income at 0% back then. I don't know how that recipe went, right? But nowadays, it's a much different story, man, as it should be. The cost of capital, man. You either save or you consume, Kevin. If you save, you're supposed to be able to consume more in the future. Isn't that like Econ 101 when I was learning it? With that in mind, man, I mean, it is, right? It was that's what they taught you. You either consume, folks, right? You get one item, you consume that one item, or you save that one item, and as a result of saving it, you are allowed to consume more in the future. That's like the fundamentals of whether you're going to save or you're going to consume, and it only works if, guess what, you get to consume more in the future with some type of interest rate. With that in mind, Kevin, what are you guys talking about coming up at 12 o'clock today on Fast Market, man?
Some fun names to look at today. Tommy, we'll look at Block or Square, whichever you want to call it. They have earnings out after the bell. We'll look at Bookings Holdings, the travel company. They have earnings out after the bell. That's what Likefolio will talk about. And then we'll look at Google Alphabet. With everything going on, this stock has really been punished lately. And let's take a look and discuss Google Alphabet in today's show. So Square or Block, Bookings Holdings, and Google Alphabet today.
As you went through all three of them, I said Square. I said, maybe I'll ask them to give me a little teaser on Square. They say, Bookings. I said, but three great stocks, man. I want to hear a little teaser on Google, Kevin, because I found myself, I actually went to Bing for the first time in forever. The fact that they actually even just got me to go to the website is a mountain of an achievement. What do you think of Google right now, back at $91 from $150, man? And with the whole conversation going on with Google, with Microsoft, with, of course, ChatGPT and everything else Google's got going on.
Yeah, it's an interesting little bit of competition that we probably knew eventually had to pop up from somewhere with some competition in search. Is Bing going to get there to the level of basically a monopoly in search that Google Alphabet has? I have no idea. Some ad spending would help Google Alphabet in terms of YouTube. So this is still a massive company that's going to do extremely well over a long period of time. But a little bit of weak ad spending, a little bit of competition in search, and this stock has been under pressure, Tommy.
And it's pretty cool, man. In our household, I mean, it's wild, Kevin. So first of all, TFNN, we stream Tiger TV live on YouTube, of course, folks. Okay, not to mention, I just as a customer, I enjoy going down some YouTube holes occasionally. And Kevin, so we have a 5-year-old and now we have a 2-year-old, Tommy, in the house, and it's amazing. We give them a little screen time with their Amazon Fire tablets, folks. And boy, they are both, Kevin, glued to nothing but YouTube. And that is actually not healthy. So we can limit the YouTube. We turn off that app. But isn't that amazing, man? A 2-year-old and 5-year-old, because it's the control that they have for like the first time to basically view what they want, go where they go. That can be good and bad, folks. But I look at that as an investor, Kevin, and of all the apps they have, and folks, they got Disney Plus, they got Netflix on there, right? They have all of it. Where do they go? They go to YouTube every single time, man. Kevin, I appreciate the time, man, on a busy day as always. We don't talk to you on Friday. Have a great weekend. We'll be watching today. We'll talk to you on Tuesday, man.
Have a great weekend, Tommy.
You too. Folks, tune in every trading day. 3 great stocks, man. I was going to say, you got Square, you got Booking Holdings, you got Google. Check it out, folks. 12 o'clock today. We'll be right back from the market open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And welcome back, folks. We got markets open. You got a market basically coming in at pre-market session highs to the open with the S&Ps up 0.7% right now. As I said, within a couple points of where we were prior to those Fed minutes. I was listening to Bloomberg early this morning, and they were talking about some of their guests, and I forget which guest it was. Maybe Mohammed Al-Arian, maybe, but what he had said was, regardless of who it was, is that you heard Chairman Powell talking about disinflation had begun. The process of disinflation had begun. He said something like that 11 times throughout his press conference. And within the Fed minutes, that was nowhere. The disinflation. Pretty much that word was nowhere. So pay attention to that potentially. And pay attention to the fact that, because I remember that word, and when he said in the press conference, and I love listening to those press conferences and having the S&P futures up at the same time, because it's amazing sometimes you hear a line and you go to the futures. You say, oh, is that, are they? And sometimes there's the reaction you expect, and sometimes there's not. And he said something like the disinflation process has begun, or clearly the disinflation process has begun. He said something like that, where it caught me like that. I said, whoa, that is a very strong statement, because yes, it may have peaked out, but has the disinflation process begun to where it's just on a path now? And that's not how he said it, but it made me pause, because that was quite a strong statement. So interesting to see that strong statement not really expressed in the minutes. And what was expressed in the minutes, if anything, as Kevin said, they had a little bit of dissent. You had potentially 50 basis points going in there. So what do? We march forward, folks, and we see where we go from there. Next meeting, I believe March 21st and 22nd. Of the Federal Reserve. So what do we have? 1, 2, 3, 4. 4 weeks from yesterday, we get another rate hike. Pretty remarkable. That's where we are, right? 4 weeks from yesterday, we get another rate hike. 6 weeks after that, we probably get one more. 6 weeks after that, we probably have another one. And meanwhile, the market's still above 4,000, and that's when we have inflation raging. I tell you, folks, I got an update. So I've talked about my home insurance on here before. My father, my dad, he's talked about it many times. Home insurance. Say, man, jumping around completely. But if DeSantis has one thing that might come up and bite him hard, folks, it is the home insurance crisis going on in Florida. And it's not because of hurricanes, okay? I tell my friends this. They say, oh, climate change is coming to get Florida, right? No, that's not it, okay? This is a doing of our choosing, all right? And the carnage going on in Florida right now has the ability to undo any politician. That's all, because it's so harsh, man. So you got to imagine you have my insurance for home insurance. And this is for a 1,600 square foot property, folks, okay, in South Tampa that happens to be a duplex. But that really doesn't matter for the purposes of this quote, because it's a primary residence, 1,600 square foot, 4-bedroom, 2-bath home. Essentially, that's split models. My insurance this year, the renewal came back at $7,366. $7,300 and something. I think it was 66. $7,366. Okay. Even if it stayed at $7,300, okay, I'd be paying more over 30 years for that insurance than I did for the house originally. And that's if I pay that same rate I'm paying right now in 30 years. Well, we know that how things work, and it's going to be up, right? So bottom line is, what happened? My dad's been talking about Citizens. You got to fight with the insurance agents to get a Citizens quote. Some of them won't give it to you. Some of them give you a runaround. Some of them say it's the last resort option. Bottom line, Citizens comes back like $2,300. And what they do is they give you a few options, and the few options were $2,300 for the basic, $2,500 for the middle, and $2,800 for the upgraded. And one of the most dramatic differences in there was that your hurricane premium dropped to 2% for the most elevated price in there. Bottom line is, folks, if you're in Florida, if you're dealing with it, and I know we got a bunch of listeners in Florida, go get a Citizens quote if you can, at least, because it is staggering why that is going on right now. We have private insurers, and what's going on? Most people, this is why I'd say it has the ability to undo it. Most people, okay, will go. I mean, that had your payment, folks. That had a payment going from $2,200 to $3,000 on 1 year. That's an $800 monthly rise in your payment. That's $10,000 after taxes, practically, that payment went up over the period of a year or two, like nothing. Most people can't afford that. There's going to be carnage out there. And the bummer of it is that most people don't know enough to have the ability to go get Citizens, to find Citizens, to find an agent that will give them Citizens. So most of them don't have that ability. They perceive Citizens as a lender of last resort when private insurers are not able to do that, when that is not even the case. You can go out and get Citizens. Go get a quote, find an agent, send me an email, tommy@tfnn.com if you're struggling. I'd be glad to help you out because it's crazy. The amount, those quotes came back, I couldn't believe it. So check it out. And with that, we got a call. We got our man Jose in Lakeland. Jose, what's happening, man?
Top of the morning. Hey, hey, I've got a solution to this whole Ukraine mess. Stop sending arms to Ukraine. Start sending bottles of vodka to Russia. That'll ruin them.
Can't they handle their don't they drink? Anyway, I'll get myself in trouble just even by trying to get a laugh.
Yeah, I know.
What's going on, man? What are we looking at?
I was channeling you. I think I know what you were going to say. Hey, we're all waiting for this next leg down, October lows, according to the Grandmaster Tom O'Brien Sr. So I'm thinking, do you agree that we probably should be heading down middle of March? I mean, you're going to get some kind of window dressing, don't you think, before we take the big plunge?
No, I don't know, man. I don't know. Nope. I think we could go down. I was listening to his program yesterday talking about the slow bleed. And maybe it's slow. Maybe it's even a little bit faster, I'd say, because, last Thursday and Friday, that realization and the continuation on the long weekend into Tuesday, man, if we don't get some data that kind of changes the last data we got, and that's, I talk to Kevin all the time. I'm trying to ask him impossible questions saying what's going to happen in 6 months or a year. And the data is going to drive it, man. And that was a really rough month of data for January in terms of how hot the economy is, right? How hot inflation is. You saw the market catch up with the implied rate of the federal funds rate, and the market's still pretty lofty. And a lot of people smarter than me say the earnings pinch is coming later, and we see some of these companies, man, like Walmart, for instance. Now, they researched higher, but you see it. You see companies like that. You see companies having to pay $1 billion for workers, et cetera. I think, and then you have some real competition, man, in terms of yield. If you're anywhere near retirement, man, I'd be hard-pressed to be putting my money on the line, a decent chunk of it at least. You want some action in the market. Maybe it makes sense, 10, 20, 30, 40%, depending on where you are in retirement. But 4 or 5% guaranteed, man, in the market when we have inflation that's raging and you might have a Fed that has to stay.
I agree with that, but you know what? I have a new perspective when it comes to a Kathy Wood or any fund manager who double and triple down on positions, losing positions. They're going to come back. If you're patient 6 months or a year, it's going to come back. It has to. It's the famous Ponzi scheme, not to be confused with pyramid scheme. Just wait and it'll come back.
I'll talk about
they
Kathy
always end
Woods.
up looking good.
It doesn't have to, though, man. We're coming out of 0% for like ever. That's the only thing that gets weird here, You want to hang with us? Hang on if you can, okay? Hold on 1 second.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P's up 24. We're talking to our man Jose in Lakeland. And Jose, so the only thing I just want to add is you say like have to. Things just get weird when you look at where we've been and where we are and what the cost of capital is, especially with some of the growth companies. And you mentioned Cathie Wood. And the one thing that I like about what she talks about is that she has a 5-year time horizon. And if you're talking about companies that are going to potentially change the way we operate in the economy in the world, at least 5 years seems reasonable, and that's not a long time if you're really going to have a a payoff.
No.
But you look at hers,
man.
I
mean, if you're a fund manager,
negative.
You better say 5 or 10 years,
negative.
or you're not going to have a job.
She's
Can you hear me
over
better?
The last 5 years,
the
even, Jose.
Call screener said he heard some wind coming through my phone. I'm in a hot air balloon, and I'm dodging sidewinders.
Well, I appreciate you hanging on the line. I was just going to say ARK is negative over the last 5 years, though, Jose, from 2018 to where it is in 2023, it's still below that price level. So how does that make sense? Because you got to tell me that nothing was too weird at the beginning of 2018, in terms of where prices were, right? We got into the pandemic 2 years later. Everybody started doing everything online.
Yes.
Tesla took off negative 5 years in her fund. That's, how do you square as in eventually, not a year or 2 or 3 or 4 or 5, man, pretty remarkable, especially when it couldn't have gotten any better, man. Everybody's doing everything online, right? Telehealth she's big into. She's into Zoom real big, all that stuff. In over 5 years, you're losing money. So that's a factor, man, of rates for sure, at least part of it, part of it. So.
Yeah. Hey, just a quick comment on the Fed. The Fed wants to knock out the consumer right now, which is 2/3 of the economy. A big word right now is curtailment, whether you're a manufacturer or you're a mill producing lumber from logs coming in, trucked in. The word curtailment, what benefit is it for a manufacturer or a mill what's enticing for them to produce any product right now? When you have the Fed killing off the consumer, there's not going to be any demand. Why would they put operations into, you know what I'm saying? Why would they bring up supply, the supply chain? Why would they?
I mean, the consumer, this is where, retail, we get numbers that are in contrast left and right. It's like, is the consumer really dead? Yeah, people are pulling back, but you got retail sales in January up 3%, man. You got jobs for the month of January, 500,000 plus adding jobs. You're only losing 192,000. We got wage gains, and I see companies coming out. I can't remember which one it was yesterday. Maybe it was Walmart. Maybe it was Home Depot. One of them put like $1 billion in to pay their employees, and it mattered on the bottom line. Because guess what? People are still spending money, man. I mean, that retail sales was pretty shocking. That almost spooked the market. And then you got the PPI number that it's like, hold on, we got retail sales at 3%. And then what did the PPI come in? Super hot. And so how do those two numbers combine, you know? And at 4,000, man, in the S&Ps, I mean, you look at this thing in the age of free money, Jose, and I know you know it, man, but this run from the bottom of 2009, let alone if you just took at the highs of 2007, we were at 1,500. We're at 4,000, man, over 15 years, you know, and that's with a dip to 600 and change. And you're still taking that's it's just we're sitting right near the highs, man. So, you know, does it have to come back, man? Does ARK need to make money over 5 years when we go through a pandemic and everybody does everything online now? Doesn't have to happen, man. So we're.
Yep.
I would at least, if you tell me, if you told me we're a little bit lower than where we are right now, just if we were at like 3,200 in the S&Ps, I'd say, well, yeah, you know, you can buy something, man, you hold it, you might be okay. But at these levels, man, we're still kind of lofty where you buy it, you might get stuck for 5 years or who knows, you know?
Well, that's true. I agree with that. You are up at lofty levels still. I still think if I'm waiting for the buy of the century on this next leg down. I think, you're going to have to be patient and wait, but I think, I don't know, it seems awful enticing to go in on the next leg down to October lows.
I'm totally with that, man. I'm totally with that. You know, 3,500 versus 4,000 right now, much more attractive. And 3,200, man, I would like, and, you know, maybe you don't have to peg it. Maybe you go out a year or two where you just, you know, not you go out if you want to put money in the market. And I'm getting more back towards like, you know, retirement planning folks or something. You're saying, you know, I want to wait. I want to put money in, but I know we still have some volatility. Maybe you just peg a certain amount every 6 months and you put it in over the next 2 years or something, Jose, you know, because I feel like it's going to have some volatility to the downside. Are you going to try and peg that exact number? But once we get over this, I agree that, you know, maybe we come out a lot stronger, man, because we get that leg down over the next year and we sort out rates. We push out all the weak companies that can't function when interest rates are where they are. And then maybe you surge higher. Yeah.
Yes, time is always your friend. Time is always your friend. Hey, I got to get this air balloon to the ground. There's a sidewinder coming at me.
And time, the other part of that, right, is if you wait a year with that capital, Jose, you're getting 4% on that money or something like that, man. So the opportunity cost trimmed at least that you're making money on that capital while you're waiting for a potential buy, man.
Yes.
Okay.
Good
Thanks
deal.
for the call, Jose.
Good
I always
deal.
appreciate it, man. Have a good one.
Thank you.
You know, it's a good conversation, folks, because nobody knows all the answers. The market trading higher. We're up by, 0.8% right now. And you know, just keep in mind where we are, because this chart, folks, okay? I mean, that's not what a Max Payne situation buy of the century looks like at 4,000, that you can't go wrong and the stocks will definitely come back. You know, that's the thing where things get weird. You know, can you say, yes, if you buy at 4,000, don't worry. Things will come back. They will come back, okay? But you might take some time, folks. And you know, S&Ps, we're going to back things up on a monthly, all right? But boy, you talk about, folks, some time. You talk about 13, 14 years in terms of where you were in the year 2000 to where you were in 2013. Flat action. And that's not the NASDAQ 100. Yeah, it took 13 years in the S&P 500 from the year 2000 to get your money back to actually show a profit. Okay? Now, that is after quite a historic run, right? That's after we went from 1987, 182, up to 1,500. Okay? But saying at these price levels that if I give it enough time, I'll be okay. Well, do you have enough time? Do you have 15 years? Do you got 5, 10 years? And, right? And the kicker of it all is the opportunity cost for your money making a risk-free rate of return. If you're anywhere near retirement and you're worried about taking a drawdown to 3,200 to 2,500 in the S&P, okay, I'd advise you to lighten up in the equities and make sure you're earning a guaranteed rate that's akin to what the market's getting right now, because it just might not be worth it, folks, right? Maybe you have enough capital to make a plan with only 20% of your equity in the market right now. And could you miss out on some gains? Of course you can, right? That's the risk. The risk is you miss out on the next market acceleration. But what's the risk on the other side? The risk on the other side is that we have a pullback, and I mean, it almost looks like I'm fear-mongering when I just take a 382 or a 50% or a 618 of the straight line move we had from 2009 to 2022. Just a 382 gets you to 3,200, folks, which is a 20% pullback in equities. I'd be at least prepared for 20% pullback in equities. S&P's up by 30. Not today, though. Markets rising higher, well above the highs of yesterday. How high can we go? NASDAQ 100 up by 1.1%. One more segment, folks. Stay tuned. We'll take a look at some of those equities with earnings today. NVIDIA. We'll take a look at Domino's Pizza as well. Be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got NVIDIA up here, up 14.39%. You're positive by $29. Make it 30 to the upside. It's not stopping, helping the market right now. NASDAQ 100 up 1.25% right now, up 151 points. You get the Dow right now up 0.9%, 4,034, and the Russell up by 1.1%. We jump around to some of the FANG stocks. Amazon only up about 0.3% right now. The big dog, Apple, up 0.6% right now. We jump to Microsoft shares, up 1.93% right now. We jump over to Google, flat on the session. Meta shares right now, up 1.1% right now. We jump over to Tesla. Tesla up about 1.3%. We mentioned Domino's Pizza taking it on the chin earlier. Almost down double digits still. Domino's down about 9.7%. And after the bell, we get some Warner Brother Discovery. Their numbers after the bell today, up 1.7% ahead of that. And we jump to some of the currencies as we wrap up this hour, man. It was a quick hour. Dollar index Yeah, pretty much right where we're starting it off. Got a little bit of a lift above 104.60. So what do you have? You have a little bit of a weakening of the dollar. Are we getting the same action and rates? We sure are. Higher price, lower yield. Look at that. So just like that, we were down at 110.25 on that number. We rise to 111.10. So much for 2%. See if I can pull it up real quick in terms of where we are right now on the yields. We're talking about a yield of, come on, cooperate. No, it's not cooperating with me. There we go. Yeah, 3.91 almost. We were at 3.96 when I started the program. Pretty remarkable. NVIDIA, yeah, that's remarkable. And this thing, AI, it might be the game changer, man. Not enough time at the end of the program to go through it, but they're launching a new cloud service to tap into the growing enthusiasm. They had their CFO said NVIDIA is working with all major cloud computing providers such as Amazon, Microsoft, Google on generative AI tools. The opportunity is significant in driving strong growth in the data center that will accelerate through the year. It's going to be an interesting day, folks. You have S&Ps up by 32 points right now. Watch out. We may get moves in both directions today. Ahead of important inflation data tomorrow, of course. Thanks for starting your trading day off with me, folks. And don't forget about, I should have mentioned, our man Larry Pesavento. Great time for a live trading webinar 2 weeks from yesterday. When you sign up, you get his Fibonacci 24/7 newsletter, folks. Check it out on the front page. Our man Basil Chapman's up next. Have a great Thursday.